Welcome back, guys, to another video. In today's video, we will be discussing where the current housing market is, taking into consideration all of these economic and political changes that are taking place right now as we speak. We will dive in and see how these trends will impact you, the buyer and seller. So if you are in the market right now and you're feeling like everything is moving really slow, or things are just moving way too fast, both of those feelings are valid because when there's uncertainty and fear in the air, people feel all sorts of feelings. So let's get started. Before we dive in and start talking about the political changes and economic trends that are taking place in the overall country, let's talk about local real estate data first to make some conclusions and to see what is happening in the local market. So we will be looking at market data for the city of Fremont, which is located in the East Bay area of the Greater Bay Area. Now, as you know, real estate data and real estate markets are localized. So this data that I'm going to talk about right now may or may not translate to your local market. But if you're in Sacramento or in other parts of the Bay Area or even in LA County and Southern California, this data may speak to you. But if you're watching from another part of the world or another part of the country, it may not fully translate. So let's dive right in. Like I mentioned, I'm going to be talking about the city of Fremont, single family homes. We're going to look at the data for the month of March 2025 and compare it to the year prior. So looking at this data right now for homes sold, in the month of March 2024, last year, 90 homes sold. And this year, 2025, 75 homes sold. That's about a 16% decrease in inventory. Average sales price. This year, the average sales price is about $2,058,000. Last year, it was about $1,950,000. Sales prices have increased about 5.73% from the year prior. Moving forward, we have average days on market, which tells you how long the property sits on the market. Last year, they were selling in about 9 days. This year, it's about 11 days. Not much of a difference. Properties are still selling very fast in this area. Now we're going to look at sales price versus list price. Now, sales price, homes that were, say, listed for $100, just using this as an example, would sell for $112. So 12% above list price. This year, homes are selling about 8% higher. So not that much of a difference, but homes definitely are not selling, especially in the city of Fremont, not selling below asking or list price. Moving forward, we're going to look at year-to-date sold. Last year, at the same time, 194 homes had sold. This year, we're at about 149 homes, almost about 50 home delta there, which can be significant, especially with the amount of buyers we have and the amount of inventory that's available right now to sustain and meet that demand of those buyers. Average price per square foot in the month of March was $1,152. Now, this data that we just looked at gives you perspective that homes are not sitting on the market for too long. Inventory is not enough to meet the demand, and homes are not selling below list price. That's a fact. We just looked at data right now. Obviously, homes are not selling 20 to 30% above asking like they were selling in 2021 and some parts of 2022, but homes are definitely moving here in the Bay Area and they're selling above asking price. Now let's talk about the overall economy and look at the trends that are happening right now and how these trends may impact the real estate market. A lot is happening in the market. There's a lot of changes that are being thrown at us every day, but I'm gonna talk about three main changes that are gonna impact us or may impact us. To give you guys context, depending on when you're watching this, I'm shooting this video Monday, April 14th, 2025. So number one, 10-year treasury yield went up significantly. Now, when the treasury yield usually goes up, it's indicative of the fact that the market is unstable. There's uncertainty in the market. Now, how does this work? So treasury bonds are essentially an instrument that the US government uses to get more funding or get more borrowing from investors in the markets. Just like how stocks work. You know, private sector uses stocks to get funding. People buy stocks. They're able to use that revenue to do different things in the company. Same thing. US Treasury bonds is kind of like a stock for the US government. So what happens when there's uncertainty in the market? People stop buying stocks. Same thing. These investors that I'm talking about, they're in the trillions and billions of dollars. They use margins and they buy these treasury bonds, and that's how they make money. So when people are not really buying bonds, or the buying of bonds has slowed down, or a lot of people have just let go and there's been a lot of selling off of these bonds, the government needs to entice these investors to come back. So they increase the yield. What it means is if they increase the yield, when investors buy these bonds, now they're able to get a higher rate of return on their investment. But what that indicates is because the US government is supposed to be the safest investment in the world because they can print money, they can levy taxes. It's supposed to be the safest because they always pay their investors back. So when investors start to pull back, that's a sign that there's uncertainty in the market. There's blood on the streets, which a lot of us are feeling right now. And that's why you've seen the treasury bond go up later part of the last week. Now, Monday, today, rates are a little bit better, but the treasury bond yield is directly in proportionate to mortgage rates. So when the bond yield goes up, mortgage rates go up. So I suspect that the rates may hover here for a little bit because of the uncertainty that's happening. But there's a Fed meeting that's coming up on May 7th. So if you're really interested in what's going to happen, watch and listen in. However, Chairman Powell had made some statements last week and the week prior that he's also uncertain of what's happening in the economy. So there's a lot of uncertainty happening. We just got to watch closely. Number 2, layoffs. We already knew this after the presidential election when they made DOGE, however you say that, which is a department that is an oversight for all the different government departments, and they're trying to lean down, help the government cut their deficits, make the government work more efficiently and effectively. The intentions are all really good. There's a lot of government layoffs happening, which is contributing to a large delta here with people getting laid off, especially in the government sector. We'll probably find out more towards the end of the year when we have better data, when there's more months have passed by. Right now, there's just a lot of chaos happening, but a lot of people that are in the government have lost their jobs. Again, it's a good intention there behind this, but the intensity it's being done, that may be debatable. Now, there's also a scare for the H-1B visa folks, which also fall under the layoff category. A lot of companies like Amazon, Tesla, and other companies have slowed down hiring, have laid off some folks in the last couple of weeks. And it's just really uncertain again. The word of the day here, uncertain of what's going to happen. But layoffs are at play, especially in the government sector. And H-1B visas, which are qualified workforce that comes from another country that works here in this country, they're also very uncertain. Now, a lot of those folks that are H-1B visas are the ones that are buying homes. Majority of them are, especially in the coastal parts of this country. And those folks are scared right now. They're uncertain of what's going to happen to their job because there hasn't really been a black and white clear indication of which direction we are heading as a country. So a lot of uncertainty there, and that's another big factor that we're seeing. A lot of buyers that I talk to in the market are saying, hey, I'm going to hang tight, hold a little bit. I don't know what's going to happen with my job, especially my H-1B visa buyers. Number 3, tariffs. We all have been hearing that word quite some time, the last couple of months. We've imposed some tariffs on different nations in the world, but right now it's at pause. It's on a pause. Again, we don't know how this is going to play out for now. We are just hanging tight. So tariffs may put a lot of pressure on upward pressure on prices in this country, especially goods that are coming from China and goods that are coming from Canada. And the construction industry in this country is heavily reliant on goods coming from Canada. A lot of the lumber and wood comes from Canada. A lot of the appliances and even some of the wood even comes from China. There's a lot of cost-effective material that comes from China that construction companies use in houses. So again, we don't know exactly where this tariff trajectory is going, but it may impact cost of goods in this country. We might see home prices, especially new construction, go up a little bit. We really don't know what's going to happen if it were to go that direction. But right now, we are on pause. If you're getting real value out of this video, please don't forget to subscribe to my channel, hit that like button, and leave me a comment because I'd love to hear from you. All right, with all that being said, what to expect in the near future towards the end of this year? My 2 cents, I believe that we may see these tariff talks thrown out there, layoff talks still thrown out there. We may be in this gray area for a couple of months. Now, I know a lot of world powers out there, China, US, Canada, they got guns blazing at each other. I don't think, we're going to fire, not literally fire, you know what I mean? Like when it comes to tariffs, I think it's probably going to be a couple more months of back and forth. We may see the cost of goods go up by a little bit, or nothing may happen. Honestly, at this point, it's very, very unpredictable. Nobody really knows which direction it's going to go. As far as interest rates are concerned, the Federal Reserve has indicated that they're also uncertain about what's happening globally and what's happening to our overall economy when it comes to the uncertain situations of tariffs. So we may see the Feds not do much on May 7th, but again, don't take my word for it. I'm just a random real estate agent on YouTube. I know what I just said doesn't sound too promising and you were looking for more of a black and white answer, but we're just not at this point, and predicting the market really is a loser's game, and I'm not going to play that game. However, if you are a buyer right now, what you should be doing. Now, if you were to ask me in the time it was happening in 2008 when the market crashed to buy a home in that time, like most people, I would have been like, you're crazy. Why would you buy a home now? But what happened to the people that actually bought a home during that time? They're sitting on a lot of equity. The same happened in 2020 when the pandemic came about. A lot of people were like, what are you doing? Don't buy. The world's going to end. Doom and gloom is going to happen. And what happened? People still bought and they sat on equity. So my suggestion to you is run your numbers closely, deeply, do your homework, know your expenses, and if you can afford, then yes, it is a good time to buy. Now, I'm not a person that's going to tell you to do something that doesn't feel right on your wallet, but I know this for sure. When there's blood on the street, when there's uncertainty, when there's fear, people hold back, and that's when opportunities are really there for the taking. So that's all I have for today. If this video was insightful to you, please don't forget to share and like. Until next time, this is Karan Singh.